Hey guys, this is Jason Jenkins, founder of Jenkins Risk Management. Hey traders, I was just getting organized today. Has came across some of my old trading accounts, and this was 2015. But I wanted to show you guys. We were talking about journaling our trades earlier in the week. Those of you that are on the full access team, and I kind of want you to realize the importance of this, the importance of not only looking at your trades that you had for the day, but for the week, and both good and bad trades, you got to go through the post analysis. So this is just an inside look of what I did, but this was my numbers here um, through the year 2015. You can see this was my production schedule. So this was my trading revenue. All right, January I did 42,880. I did 1,000 trades. Um, But anyways, I had a few different books here. That's what JJ Prop was, JJ Treasury, realized and unrealized. But anyway, I had a good year, so didn't have a single losing month, which is pretty typical for me. But this January, I remember this is when long bonds were really ripping. If you guys remember, the flash crash was, I think, January, around that same time period also. Anyways, it was just a time where we had a big risk off move, and I was trading the long bond pretty well. Um, but pretty good for just a couple accounts I had on 194,000 through September, and then I was starting to move over and start this company, JRM. So anyway, guys, this is the type of trading that's possible when you get consistent. Um, 1,000 trades is pretty. I was a pretty frequent trader, still are, but I mean that was just treasuries, cash treasuries all day, every day, with a little bit different leverage. But what I also wanted to show you is this was my own records that I was keeping in Excel. So this is what you guys, this is the kind of, you need to treat, if you want to get paid like a business in trading, you got to act like one. You got to keep track of your records, and you got to keep score daily. So this was me every day tracking what I was doing. Only had, well, this is a break even day. I'd only had one losing day in January. All right. And you can see I'm keeping track of my tickets. I had 10 grand in commissions. It's $10 a ticket charge through Pershing, which is the clearing firm I was using. But number of trading days, number of winning days, 16, number of losing days, break even days. I was tracking my London trading. I traded over 50 times, I guess, in London. 50 trades during the London session. Or maybe this was, trades over 50 trades in a day, I think that's what I was trying to keep track of. Was I over trading, under trading? What was kind of the average for me that was working best? So this was my win rate, 89%, loss rate, 11%, total nominal winners, average winning day. So this is the stuff we're going to get into, guys. And then here I was graphing out what, my risk reward. My average winning trade was 1,600. My average losing day was a little bit more, but my frequency of losses was so small that that's okay. And that tends to be the style of trading I teach you, that we have a lot of winning days. The days you do lose are going to be a little bit bigger losing days, or the trade that you lose on might be a little bit bigger, but the frequency of the wins is so much greater in our style that a lot of traders don't have that. They always want to be 3-to-1 risk reward, but they have a lot of losers. They can't get to this win rate. I mean, a 90% win rate, directionally day trading, that's like unheard of. All right? So this is what I teach my traders, guys. This is what you can learn. But this I wanted to show you under the hood. This is what it looks like when you gotta go through the drills. You gotta do the post game analysis. You gotta watch the video after the game. You guys know that any professional football player or hockey player, whatever, it's constantly watching video, even after the game, before the game. This is what it looks like. If you're going to be a successful trader, you got to keep track of this stuff. And you should be passionate about it, and you should enjoy doing it. You should know how many winning days you had. You should know what your winning percentage is. All right, so we're going to work more on this type of stuff. Let's just go over a couple trades today. I've been trading dollar lira. For those of you that been following the intermediate term, I like that we broke out here. So we tried a couple day trades here today. Not a lot of movement. We bought here, never got the follow through. This easily could have took off on us. All right here. This was nice. I like this price action. This easily could have followed through to these highs, but it ended up kind of going sideways the rest of the day. You could have gave this a shot here. This was a nice move with the 15-minute cycle also. That had some okay follow through. It's just the afternoons is tough. There's so much lack of energy. All right, and then here was the euro. We had a successful morning trading euro. We came in, we saw this wall, we bounced back. You created another kind of smaller wall here that we traded. Right, we failed about halfway. My traders know what to do that. And then we took this short, covered into these lows. Some of my guys might have covered here, or even down here at the new lower low. So overall, running a nice course short. The euro has been a pretty good spot for us this year. I took a snapshot. This is my year to date on the euro. I'm still running a small course short here into the number tomorrow. So this is just in one of my accounts. This is an account I trade core positions in also, in addition to day trading. So anyway, guys, hope that helps. Let's talk more about journaling our trades and keeping up on the business of trading. All right, I'll talk to you in the morning.